Hi, good afternoon. You're watching Closing Trades right here on ET Now with me, Aisha Faridi, Ajay Sharma as well in the studios. And weak global cues have definitely marred the sentiment a little bit on D Street. Having said that, it's interesting to note while we may have even breached that 19,500 print on the Nifty spot for a brief bit, but the range is as narrow as only 0.5% from the high to the session lows of the day. So yes, while we dip below that 0.5% mark as well, from there you've seen a bounce back. And right now we're just about skirting around that 19,600 print or thereabouts, at least in trade. But yes, 19,600 continues to be a tough resistance like we've been pointing out. The action clearly continues to be in the broader end of the market. Financials though are the worst hit sector, and it's media and metals which are actually sort of afloat in the green right now. And Ajay, just looking at the broader market trend, I mean, Trent just came out with its earnings, which it's still reacting to. Aditya Birla Fashion, surprisingly, is the one which has been sitting at a big move from the word go today, and now almost a 7% surge. India Cement, Bharat Forge, Voltas, the action clearly is outside the index names.
I agree with you. In fact, for an intraday, if you pull up the intraday chart, you would see that, yes, we were kind of trading slightly weak, but we have rebounded 50-60 points in the last hour of trade. Bank Nifty too has come out on an intraday basis, but whether it will be seen, look at that. That's the intraday chart for right now. Looking at Bank Nifty, it continues to sulk. So yes, the action is clearly outside wherever there are very explicit triggers, be it earnings, under ownership, good guidance, commentary, sectoral churning, whatever you may call it. But if you only look at the benchmarks, then it appears like a dull market. But apart from that, there is a lot of action happening. Look at Gland for a second day running. Even after the con call, 5-6% gain coming in after yesterday's 20% circuit is something to watch out for. Kunal is also joining us. So Kunal, they say that never short a dull market. It is a dull market. So would you caution our viewers that don't take this, dull move on the benchmarks at least as a sign of weakness? What are you reading into it?
Yeah, definitely, because the first sign of indication which we look out for when you are heading into an event is rise in VIX. And look at the VIX today, it's I think down by 5 basis points as such. Now, when you're heading to a big event like an RBI policy or with the markets in a bit of tenterhooks, if I can use that word, in the last 1 week, 10 days, the anticipation is that the market or the VIX could probably rise. But then when you're looking at the VIX being at a level of 11, the Nifty still not being able to break below that 90,300 mark, which was the previous week support, it tells you that the markets are still getting into a bit of a somber phase. Not expecting too much of a volatility on the indices even post the RBI policy except for an intraday movement, but net I think 90,500, 600 is where I would expect the index to be, hopefully post the RBI policy as well.
Okay, and that's tomorrow, the RBI policy. So fortunately, it's not such a long wait. It's important to mark the global sentiment as well at this point in time, because those are the dynamics or the macros which are changing a little bit. Fortunately, Europe has had a very, very strong start right now. So you've got the DAX holding up 200 points. It's a 1% move on the FTSE as well. The CAC as well in excess of 100 points of a move. And the broader markets there too are the ones which are seeing significant strength. So if you look at the broader FTSE MIB index, for instance, that's scaling higher by 574 points. And that's a massive move of about almost 2% coming in. Even if you look at the US futures, for instance, after that big gash down yesterday, the recovery thereof, and still the week closing. From there too, right now it's it's in the positive, a little tempered, but a strong rebound there as well. The Nasdaq futures, after scaling lower by I think almost 1% overnight, it's already up almost 0.5% this afternoon.
In fact, Aisha, I must add that the story about mid caps is not only limited to US or Europe or India. Even in the US, while the Dow and Nasdaq may be kind of getting into a brick wall, but it's the Russell 2000 which is doing very well. So globally the rally seems to be widening.
Absolutely.
So that's the pocket which most of the people are saying that this kind of a headwinds right now may be temporary in nature, because actually whenever a global rally widens, it actually brings in a lot of new participation.
Absolutely, and it also indicates that the fundamentals are still pretty much intact.
Those are some visuals coming in from Mr. Nayak's last AGM. Yes, he was very excited, mighty excited yesterday when I spoke to him. And right now,
he's accompanied by his wife.
I think so too. I haven't met her though. But he has a beautiful bungalow right next to Ranbir Kapoor's bungalow in Pali Hill. And I went to the first floor where he operates out of as an office. And those are the visuals coming in right out of Birla Matoshri at his last AGM. Look at L&T. In fact, L&T is shot back into the green right ahead. The other officials are welcoming him, and we'll be looking out for the commentary coming in from his last AGM. A legend, clearly, for the engineering and infra space.
Ajay, you had a candid, long, exclusive chat with him. Summarize the takeaways for viewers who are just joining in.
Yeah.
What's the future of India and L&T?
Well, the future of our country in terms of infra spending and hydrocarbons and all of that is pretty correlated with how L&T has been. It is a unique company and has fought a lot of takeover battles. Mr. Naik, at one point in time, do you remember, Kunal, Reliance and even the Birla Group was interested in picking up majority in L&T, but Mr. Naik thwarted that. And of course, after that, he built that company from, I remember, I have seen L&T's revenue under 4,000 crore, and now it's multiples of that, at least 20x from there in the last 15-20 years. So he's a legend, clearly, and that's what he's getting, love and affection of shareholders and his admirers in the company, and he's being taken right inside the auditorium. We'll be getting commentary.
6-decade-long journey.
Just imagine, 6 decades. And he's seen political leaderships, he's seen corporate, whatever there is to see.
Yeah.
And of course, international, because now 1/3 of their operations come out of Saudi Arabia,
Yes.
Middle East.
Middle East.
They've been BFF with Saudi Arabia before even, many of the companies who now say are very
Thought
close
of
to
it, yeah.
Exactly. So 30%
Yeah.
of our revenues coming from Middle East. So L&T is a case study, and Mr. Naik, of course, is the hero of that case study. But we'll take the discussion forward. What do you make of L&T, Kunal, at 2,700 now?
I think it's an exceptional chart. If you're bullish on Nifty, we say that you have to have L&T as part of your portfolio. So I think it just complements the way the markets have moved. And again, a very good sign that the stock is also showing intraday recovery. So would be bullish on L&T even from current levels. Difficult to place a target from this stock because every time we see the stock moving up higher by 10%, it surprises by another positive uptick of another 10%. So we can probably expect a modest target of another 10%. So which means maybe 2,800, 850 as a level for L&T.
Wow. And the crux of it, like Ajay was saying, that if you're bullish on India in your core long-term portfolio, you've got to have it.
There's also a talk of restructuring happening there. So you thought only Reliance Industries can restructure and create value. He was so hell-bent on restructuring L&T into a new L&T. So he's saying there are two L&Ts housed under this one. One is the legacy business, construction, engineering, and one is renewables and all of that. That's the new L&T. And he's been saying, I'm looking for a CEO for that one.
Yeah.
With 100 crore, 50 crore kind of a pay packet. But these boys of today asking too much ESOP. So we couldn't, click a deal so far. So all of that is happening. A restructuring.
Why wouldn't
talk.
you ask for an L&T ESOP?
Oh, well,
Anyone
why
would.
wouldn't you? Why wouldn't you?
But yeah, since we're referring so much to Ajay's chat with EM Naik, let's get you a slice of that.
With 130 billion people, we
not
need 5 to 6 times more. 5 to 6 times than what we are doing now. However, if you look back, the rate of growth and spending in infrastructure and core sector has improved, no doubt. But it can be much more.
Right. So let's come to L&T. The L&T which you have built up for tomorrow, as you were saying, for that, what are the areas where you see the sunrise sectors for opportunities from L&T's perspective?
So far what we are doing in yesterday's L&T, hydropower,
Yeah.
clean air,
Correct.
nuclear power, clean air,
True.
right? Then if you do solar power, which L&T is the biggest,
Yes.
putting up the plant.
Yes, EPC work.
And you might be surprised to know we are doing 10,000 crore worth of solar power plant in Saudi,
Wow.
outside India. And this year our target is 8,000 more.
Doubling it.
So we have 50% outside, 50% within India. In India, basically the resources
Is an issue.
are not good enough. And the third thing is wind energy. Right? Now we are working on wind energy, not just green energy, so-called what you call. According to me, green energy is all these four
All
energy.
put together.
Now, wind energy needs a lot of space. And that you can't take away from agriculture. When the land mass, China has 3 times more,
Yes.
US has 3 times more. Canada has 9 times more. And if you look at per capita, it is much, much more.
Yes.
So I think you have a lot to catch up. And you got to have focus, dynamic political will and leadership to be able to do it. Now when you talk about the, let's say, wind energy, as I told you, it requires a lot of mass, and then you will find the land is not that much available, and wind farms cannot be put up wherever you want. You'll have to see the wind velocity, wind efficiency, and when you take all that into account, India doesn't have too many areas which are also not agriculture friendly or agriculture oriented. So a lot of wind farms are going to come up in the coastal part.
in association with Ujjivan Small Finance Bank, बनाएं एक बेहतर जीवन.
All leaders in individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire
What
case.
is it going to mean for the business?
What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
Hi. What's that? That's a Manish Malhotra.
Not your dress.
The cupboard. The laminate is a Manish Malhotra design.
I totally think I should bring Manish home.
Why not?
Century Laminates by Manish Malhotra. Fashion for your furniture.
Live it up, live it up.
Strong processes and risk management help you achieve your goals steadily and sustainably. Nippon India Mutual Fund. Wealth sets you free.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Invest in the share market, earn lakhs with guaranteed returns. This limited period offer is just for you.
Snakes have cameras in their eyes.
How can you believe this nonsense?
Aren't you doing the same thing, Dad? Nobody can promise guaranteed returns in the share market. If you see any such message, mail or ad, you can be sure it's wrong. Such schemes defraud investors and are considered a crime. I've explained this to you so many times.
So much good. Investigate.
Your issues become our agenda. From airfares to government high-handedness, we voice your concerns and demand answers for your questions.
4 से 5 घंटे की बिजली कटौती हो रही है. टिकट बहुत दिक्कत हो रही है मैम.
Because we believe in fighting for what is right. Mirror now, you first.
Announcing the next edition of Times Now Amazing Indians Awards, where we honor ordinary individuals who make extraordinary impact. Times Now Amazing Indians Awards 2023. Coming soon. Co-powered by Vedehi Institute of Medical Sciences and Research Center, Bengaluru. Associate sponsor, Adani.
बीमारी हुई तो पता लगा कि हॉस्पिटल का बिल ऑफिस के हेल्थ इंश्योरेंस से कई गुना ज्यादा है। काश मैंने हेल्थ इंश्योरेंस लिया होता। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 390 रुपए महीने से शुरू।
While the market has come back in the green territory, broader markets were already having a relatively much more active day. Daljit Kohli and Nuresh are also joining us on the show. Look at that mid-cap index. Daljit, good to have you. In fact, what an interesting day to have you. This is the second day in a row we are seeing very big moves coming in the pharma space. So let's take our discussion forward. Did you attend the Gland Pharma con call? 20% yesterday, another 7-8% today. More to go, or what's leading to that re-rating kind of move?
Good afternoon, Ajay. Yes, I am very bullish on the pharma sector as such, and in our fund, as a disclosure, we have already loaded up quite a few stocks in pharma. Unfortunately, I cannot talk about stock specific due to the compliance requirement. But I would say, yes, there is a big change happening because of the shortages. In fact, if you see in last many months, US has been witnessing a lot of shortages on injectable side. And within the injectable space, if we have to play, then there are 3-4 companies from India which can participate in that. Of course, the name you have taken, that is also one of the participant in that and a big beneficiary. Perhaps the market is also trying to build that only, because otherwise, if numbers we talk, numbers were not so extraordinary that that warrant 30-40% move in a span of 2 days. But because market had built in worst scenario and things are changing, so its market is now trying to reconcile with that and trying to build in that. Similar situation is happening in other formulations also for US business, because if you see last 1.5 years post the COVID, there were two things which happened. One was that there was too much of inventory built up, especially the antibiotics and all that, because everybody thought perhaps tomorrow there will be no day to buy antibiotics. So everybody loaded up on that. So that inventory was stuck up in the system and COVID went away. So all that was lying in the channel partners. So that took almost 1.5 years to get settled down. Also, all these companies, the manufacturers, they were stuck with high cost inventory on raw material. So both sides, they were getting squeezed. Those things have now taken care of. And now from here onwards, I think normalized working will happen. Third important factor is that in last 2-3 years, we've seen a lot of compliance problems for most of our large cap companies, especially. There are a lot of plants were under US FDA issues. Those issues have also resolved to a large extent. We have seen some companies getting approval after 6-7 years. So that has again resulted in more approvals coming in and an opening up of channel for new approvals to come. So I think all the combination of all this is playing around, and also the stock, the sector itself has come into reckoning. The good part is that most of the funds were underweight on the sector for last 1.5-2 years. So everybody has to catch up. So that itself will also, technically it will also add to the rally. So we have also participated, and I'm happy that we got into the right time and it's giving us good results now.
Yeah, and irrespective of that 35% move that the stock has seen since the month of April, year to date it's only gained about 8%. So point being that pharma stocks still may have very well just about begun the move, and there could be a while to go. I just want to get back to that Adani Wilmar flash, because I think there was a clarification coming in from Adani Wilmar saying that they don't want to comment on media speculation. Remember, this pertains to the media reports stating that Adani Group may actually be mulling the exit from the Wilmar joint venture. Remember, it was a 50-50 joint venture between Wilmar as well as the Adani Group. Very recently listed, and heavy gains as well were accrued on Adani Wilmar since its listing. Adani Enterprises, remember, holds about 44% in the JV, although the news media reports were indicating that the promoters, that's the Adanis, are still going to hold a minuscule amount or stake in Adani Wilmar in their personal capacity after exiting for nearly about $1.7 billion of a stake. So it's saying that they are unable to comment on media speculation. Let's also check in on what Adani Enterprises, though, is doing on the other hand, and whether or not you are seeing any meaningful move there. Holding up 1.5%. So a decent move coming in for Adani Enterprises, 2,500 thereabouts on that particular stock price. But Naresh, let me get you in as well, and let's discuss pharma a little bit more. If you had to go long on any of the pharma names, which ones would you pick out?
So for now, a lot of pharma names have already done well, but Sun Pharma is one which looks interesting for the fact that the stock over the last 8-year period, the return is zero. The stock had topped out at 1150, 1200 back in 2015. So on dips, this becomes a stock which could take leadership from here on. The next one is Dr. Reddy's, which has again gone through that phase of multiple years of sideways consolidation. So 2021 highs again being tested here. So would go with the large ones. In the smaller names, we are seeing a recovery in something like a Biocon, which could be a surprise on the upside going forward. So Biocon could be one which is still left in terms of catching up. There could be a Wockhardt, which has started shaping up. So would be looking at two ones, one larger names which are back to previous highs, and the smaller names which have gone 50-60% down over the last few years and now turning around.
Okay. So that's the case as far as some of the pharma names are concerned. But Kunal, check out the graph for JSW Energy. I don't remember when was the last time we saw that kind of 8% move coming in. And that too, there is no apparent trigger. Earnings are over. In fact, earnings are weakish. And it's crossed the 300 mark very nicely after months, if I'm not wrong. How do you read that?
I think it's an exceptional chart because I remember tracking the stock at 66, 67 in 2019-20, and from there, I think the stock moved to 350 or 400 in a matter of 1.5 odd year. So after such a kind of a 6x, 7x rally for JSW Energy, what we've seen in the last 1 year, 2 years is a time-wise consolidation. But then, after such a kind of a strong up move, it's actually a very good sign that these stocks consolidate for a year or two and then they get ready for a breakout, which I believe could be the case for JSW Energy this time around. The volumes, today as well as in the chunk in the last 1 month is exceptionally high for the stock, and it indicates that it's more of an accumulation which has happened for JSW Energy. So this could be a very bullish chart over the near term. I would expect that on its prime, the stock should come back towards that 400 levels, which should be a decent 30% from current levels.
Right, okay, that's that on JSW Energy. The other two stocks that I want to just bring up is one Trent, which is reacting to its numbers. The net profit has come in higher, 46%. Revenue is higher by nearly about 46% again. And the EBITDA margin expansion has also come in. It's an uptick of about 26% on an EBITDA level that they've seen. Margins, though, have been a little bit lower on a year-on-year basis as compared to 16.25% in the same quarter last year. It's come down to 14 odd %, but I don't think the market is complaining at all. A big spike coming in after the earnings. The other one which has really stood out, though, from the word go today has been ABFRL, and in that sense, it's a like-to-like comparison, and the two are peer group companies. ABFRL has shot up about almost 7% in trade. That's Aditya Birla Fashion in trade for you. 215 is where that particular stock is. Daljit, what do you make of, these branded retail companies? Because again, much like the rest of the market nowadays, the question is about the rich valuations that they actually quote. But, the earnings also seem to be justifying that.
Yes, Aisha, I think earnings are justifying, especially for those companies which have cracked the right code. Which mean that, like, for example, the one you were talking just now, the stock has given good results. They have understood how, basically in this industry, the game is all about inventory management. The style changes, the fashion changes. So if you are able to manage that inventory well, and because that is a direct cost to you and you cannot really do anything with that if it just goes out of the fashion. So that's the biggest thing which any company has to do, and I think these companies have done some of them have done very well. We are very positive about the company which are in ethnic wear or which are specific to certain occasions, because I think there the margins are higher and there the addressable market is also very large. Plus competition is lower, because if somebody is going to buy for a wedding season or something, I don't think he will worry about 500,000 rupees or a sale or discount sale or anything. Whereas for other apparel manufacturers, this will be a very common thing. 20-30% discount sales will be very common. So for those people who are into some specific niche areas, I think those will be the best ones to look at. Valuations will remain high because growth is very high. So one has to be prepared to pay for a good company. You have to be prepared to pay a higher price.
Right. Okay, that's the take coming in on ABFRL as well as Trent. Kunal, you've actually liked ABFRL more than Trent, right? I mean, only on a relative basis. Anything that you would buy afresh at these levels?
Yeah, definitely, Asha. I think ABFRL even at current levels looks very attractive. So, we look out for that whether the stock or the worst for the stock is already behind, in terms of the price correction. So look at the price relative for ABFRL with respect to Trent in the last 1 year. ABFRL corrected from 350 mid of 2022 to I think at one point almost 185, 190 levels, and now the stock has settled into a trading range. The volumes on the stock in the last 1 month is exceedingly high. In the last 1 or 2 months, the stock has shown a bounce from 180 levels to 225 first, then a correction back towards 200, and then a bounce back towards that 215 mark which you're seeing today. So this indicates that this 200 or sub 200 level is a solid base in place for ABFRL. So would be highly keen towards being bullish on the stock even at current levels, and expecting that the stock should come back to its prime of 350 levels possibly in the next 12 to 18 months.
Okay, that's the take coming in on ABFRL. Let's check in on some of the other buzzers of the day. There's also Vijaya Diagnostic came out with the numbers. Solid set of earnings there. Net profit higher by nearly about 50%. Revenues higher by 16%. That's been the other buzzing stock in trade. Shot up immediately after its numbers. And right now also you can see some of the numbers on at the bottom of your screens. Natco Pharma came out with a decent set. EID Parry, a little bit of a dip there. Hasn't been the most preferred in the entire sugar space in any case. And yeah, you've seen the PAT take quite a bit of hit. Maybe there is a one-off. It can't be such a dip because the rest of the operating numbers look pretty much flat on a year-on-year basis. There was SJVN as well, which reported its numbers. A bleak set there. The net profit tanked about 55%. Revenues were down by about 33%. EBITDA as well down 39%. And you saw a big gash down post the numbers on this particular stock as well. And yes, I was just highlighting Natco. The net profit has shot up about 31%. The revenues are higher by 29%. EBITDA as well has seen an expansion, and the margins stand at 46.3%, and a huge spike up coming in on Natco Pharma thereof. Let's address a couple of other buzzers. We've been talking about ABFRL as well as Trent, but there are others like a Bharat Forge as well, which have really made a solid move today. Look at the kind of spike that you're seeing on Bharat Forge. That's holding up about almost 5% as we speak right now. And actually good performance there too, right?
They raised their guidance just now. Just a moment back in their press release, they mentioned that from 16% odd, for rest of the year, they expect their margins to rise quite meaningfully. And that is the reason the stock shot up right after the numbers. Numbers are okay, but it's the margin guidance. Other stock which I want to discuss, Naresh, with you is Inox Green. Yesterday belonged to Inox Wind. It ended up higher by 9% after a 500 crore block, which was at zero discount, which means unmet demand came in. And today it appears to be the case for Green. The other cousin is running 7-8%. Do you think it's heading for 80-85 possible?
So in this case, it's a pure momentum move which is going on across the whole sector, and Inox being one of the older ones which corrected maximum over the last few years. So the point is it could surprise on the upside because volumes have been good, blocks have been absorbed. So out here, the best way to trade is to keep a trailing stop loss, or every time you buy a fresh 52-week high on the one, have a 5% stop loss and ride on to the move. So in this case, 74 was the recent high. It has crossed above that. Now you have a stop loss below 72 and hold on to the position. So positive on the sector, but momentum can continue or fade off going forward. The best way is to keep trailing stop loss and ride on to the move.
Right. Okay, Daljit, we'll let you go on that note. Thanks as always for joining in on the show. Let's just take in some closing trades as well. Kunal, what's on your list?
So GAIL is something which looks attractive, and I think now the stock has moved to 117, 18 plus mark. I've been bullish on the stock since the last couple of days. Looks extremely attractive, and the setup for the stock indicates that this could be a big breakout for GAIL. So that's a stock which I'll be looking to trade on the closing. Right.
Naresh, your closing idea?
So that would be another oil and gas theme. ONGC, the stock is testing that 175 to 180 mark, which was the high in 2022, as well as going back for the last 3 to 5 years. This has been a very stiff resistance, and it could be a 3 to 5 year breakout once it sustains above this 175, 180 mark. Looking at the stock to be going towards 200, 220 in the short to medium term.
On that note, we'll take a very quick break. The recovery, by the way, for the index continues. Quickly bring up the Nifty chart. We're back at that 19,600 mark after a vicious last week and some consolidation playing out both yesterday as well as pretty much throughout today's trading session. Let's only hope that this recovery actually sustains. For now, it's actually the mid-caps which are, holding out well. It's the mid-cap index, remember, which also hit a life high just yesterday, and there too, the move continues. We'll take a break, continue tracking the last half an hour of trade on the other side.
All right, so Shibani Sarkar Kurian from Kotak AMC is joining us to take the discussion on markets forward. Shibani, afternoon. Shibani, I was just looking at the SIP data, which has surged back to all-time high and first time ever has crossed the 15,000 crore a month kind of a mark. In this light, that it surely is a vibrant market seemingly, but it appears that real flows are coming back, especially to mid-cap, small-cap. How do you see this entire collection of stocks which are directly correlated with market activity, broking community stocks? You talk about some of the AMC stocks or even, these wealth management, CAMS, NSDL, all this variety of stocks. Do you find value in them or some of them appear stretched now?
Yeah, so you're right that overall, if you look at what's been happening, not just now, but over the last maybe 3.5 years, has been the sharp change in terms of how retail behavior has been in the equity market space. And despite market volatility, clearly the good part has been that the SIP flows have been consistent and have in fact even gone up. And therefore, there is a considerable amount of maturity that has come in where retail equity investors are concerned, either directly or through the mutual fund route. And so from that perspective, this bodes well for that entire spectrum of asset managers, brokers, wealth managers, and the like. However, when you look at that space, there are a few key things to evaluate. So for instance, again, in the asset management space, there are possibilities of regulatory changes, and therefore one has to wait and see what can be the impact of those changes in terms of profitability of the business. Secondly, even within the broking space, there has been significant amount of competition, and therefore there are only a few players who are gaining market share and who are able to maintain profitability. So the way I would approach this segment is, one, of course, keep mindful of valuations in the space, and secondly, focus on only those players who are able to gain market share in this highly competitive dynamic environment and maintain profitability. So would be selective to those set of players. And thirdly, also given the fact that there are regulatory changes in the offing, would wait and watch and see how those changes impact the profitability of the business before taking a fresh call.
The fag end of earnings, but still not done. You've got Hero MotoCorp, which is slated to come out with its numbers. Let me take it across to Srishti to find out what to expect.
Well, Hero MotoCorp as a share has seen a lot because firstly there were news around the IT raids, then we had a stellar response to the newly launched Harley-Davidson X440. So quite volatility we have already seen, but when it comes to the numbers, then we are expecting a decent set this time around. When it comes to the volume of the company, then that has seen an improvement of a 6.5% on a sequential basis, and that will definitely support the earnings. On one side, the company has been increasing the prices of its vehicles, but on the flip side, we are seeing that the commodity cool-off has still not played much of its role in the quarter gone by, and that could actually keep the margins of the company in check. But let's talk about numbers then. Onto the top line, we are expecting a jump of 7.5%, and the revenue is expected at 8,934 crores. Talking about the EBITDA, a jump of 9% is what we are expecting. 1,179 crores is the expectation, and the factors that I just highlighted for the margin figure, not much of an improvement on a sequential basis is what we are expecting. From 13% in Q4, we are expecting that number at 13.2%, and definitely that will be the key to watch. In the bottom line, we are expecting a jump of just 1.5%, and 872 crores is the expectation, because do remember that average selling price of the vehicles have seen a jump of 9% on a YY basis. So these were the factors at play, but going ahead, what sort of a commentary is coming in onto the more production numbers, or rather the more sales number, because for now the Harley-Davidson X440 bookings, the number is just closed, the window is closed. So when is the company going to and planning to open that, as well as how are they seeing the demand in the domestic two-wheeler business as a whole? We will be watching out for all of those details as well. Back to you.
Okay. Thanks very much for that. The stock is clawing back from 3,000 odd to 3,060, right ahead of the numbers. The other big story developing is Adani Enterprises' intentions of exiting its joint venture, which is Adani Wilmar. The stock was sulking in trade. Reports are suggesting that the said plans are to offload in entirety the 44% stake which they hold. Pull up Adani Wilmar, that is the stock in focus. My colleague Ashesha is here, who has really gone into it, the transaction, and found out more details regarding this transaction. Tell us, Ashesha.
Well, yes, reports suggest that Adani Enterprises is looking to sell its stake in Adani Wilmar. The company, of course, has gone ahead and clarified that they are unable to comment on market speculation. But let's understand what the implications could be on Adani Enterprises' debt profile if at all the transaction goes through. Now, at the current market price, remember Adani Enterprise holds about 44% stake in Adani Wilmar. And at the current market price, this 44% stake is valued at about 22,000 odd crores. Let's understand what this means for Adani's debt profile, Adani Entertainment's debt profile. Adani Enterprises' debt stood at about 34,000 crores long-term debt as on the 31st of March 23, and their external debt stood at about 27,800 crores as on the 31st of March 2023. Assuming Adani Enterprises sells its entire 44% stake at the current market valuation of about 22,000 crores, their long-term debt will fall from the current 34,000 crores to about 12,100 crores. Meanwhile, their external debt, which stood at 27,800 crores, will also fall drastically to about 5,800 crores. Let's also talk about some other parameters. External debt to equity ratio as on the 31st of March stood at about 0.73 times. If at all this transaction goes through and they use the proceeds for repayment of debt, external debt to EBITDA will fall from 0.73 times to a whopping 0.15 times, which will be a drastic reduction. Let's also understand why the company is getting into this transaction. Perhaps looks like the company is looking to exit its non-core assets, sell its non-core assets and focus on its core business. Now, the core business of Adani Enterprises includes mining, industrials, transport and logistics, energy and utility, and it is into FMCG business through this subsidiary of its, which is Adani Wilmar. So yes, looks like perhaps the company is looking to diversify, looking to focus on its core business, and if at all this transaction goes through, company's debt profile will also improve substantially.
Absolutely, and that only makes it a more meaningful long-term story. I think that short-term play was very much behind us when you had the entire Hindenburg episode come by. But let's also try and understand what to expect from the policy tomorrow. And Shivani, I just wanted to, get in your thoughts. Of course, no one's expecting a rate cut for sure, but any change in commentary given the spike in agri-inflation led by tomatoes?
So I think that's going to be the key to watch out for. Obviously, inflation for the current month as well as maybe 1 or 2 months will be elevated primarily because of the food prices. However, also remember that some of the food price impact that we are seeing on headline inflation is seasonal, and we've seen in the past that with seasonality, the change or the way the food price inflation moves can also be fairly drastic and sharp. For the year as a whole, when you look at average CPI inflation, we expect that average CPI inflation at a headline level will still be within RBI's tolerance band. The other thing to watch out for is how core inflation is behaving, and core inflation has more or less stabilized, and therefore that should also provide some amount of comfort. So at this point in time, we don't expect to see any change in terms of either policy rates or stance, but of course the commentary from the central bank will be key to watch out for.
What exactly are you penciling in as far as your models are concerned regarding the first rate cut? By early next year, by mid next year, would we follow US? And the expectation is Jan somewhere for US?
So at this point in time, I think the way the situation is holding out, specifically where US is concerned, and the way we look at it, at least for this calendar year, we are not penciling in a rate cut by the policymakers there. Our guess here is that maybe sometime in the first half of next calendar year, you would possibly see the Fed take some action, depending upon how the growth trajectory for the US markets pan out. If you look at the data that's coming out from the US markets, labor market still continues to be fairly tight, and that is one of the key areas that the Fed seems to be watching out for. Our best guess in terms of RBI's rate action would be that possibly the central bank would wait to see how the US Fed is reacting and then take a view in terms of rates. So yeah, so sometimes maybe in the first half of next calendar year is what our best guess would be at this point in time.
Let me just walk you through a couple of important cues to look out for. Of course, top is going to be the policy back home, the RBI rate decision, but a couple of global cues as well. So you've got the US CPI as well as the initial jobless claims. They also, in an otherwise brittle global sentiment, are going to be important. A couple of important earnings. We just flagged off Hero MotoCorp. There's also Apollo Hospitals. There's ONGC, Grasim, which are all due for their earnings come tomorrow. And then Indiabulls Real Estate, they're looking to consider some fundraising, so look out for that. KRBL, a buyback on the shares, off the shares is what the board is going to be mulling. There's of course TVS Supply Chain Solutions IPO, which is also going to open for subscription. And talk about movies. Ajay, are you a Rajnikant fan?
Not really, but I heard that...
there's a big movie release,
But
Jailer.
I'm a Gadar 2 fan. I'm looking forward to that.
Oh yeah? Really?
You know, I must tell you that the Gadar 1, parts of that were actually shot in Lucknow in my school. Especially that hand pump scene which he tears apart the entire hand pump. That was right there in my school.
Confession, I've not even seen Gadar. Have you?
Gadar is a
Oh My God
complete...
2 also which is releasing.
Yes.
Oh My God is also...
Oh My God 2.
Oh,
Part 2.
okay.
I think that's
But you know, I'm excited about Dawn 3. I just saw the trailer. I don't know when it's coming. They've just revealed that it's going to be Ranveer Singh as the new Dawn.
Some time. Oppenheimer, have you caught that already?
Of course.
Already?
Yeah.
Was it worth it?
Absolutely. Hands down.
It's going to be a busy weekend.
All Oscars are going to go to that movie.
Clearly. So, let's take the action forward. Two stocks which are coming on my radar. One is 5-Star Business Finance. 7% up, right? And there is news that one of the private equity guys may be offloading something in the market. Even Ugro, which had the AGM yesterday, both of them cater to that mid and small kind of a borrower, which is doing phenomenally well, by the way. Both the stocks have shot up in the last 5-10 minutes. Is there a breakout in either of them which is happening, Kunal?
Yeah, I think it's more of a continuation because in the last 4 months for both of these stocks, 5-Star and Ugro, the price moves are exceptional from 500 to I think 820 plus for 5-Star, from 150 to 300 plus for Ugro. These are exceptional moves and consecutive price gains for the last 4 months. So, it's just a matter of continuing the momentum for these stocks without any major correction in play. And such are the kind of moves in the stock prices which chart the course for the long-term uptrend for these names. We've seen historically that whenever there's a phase of accumulation of 5-6 months consecutively in the stocks deliver results or returns of more than 50 to 80%, we've seen historically that these stocks, they tend to have a strong multi-year effect on the positive side for themselves. So I think it's a matter of just continuing to ride the trend on the upside without worrying too much of the short-term volatility.
All right, Bharat Forge is just continuing to pile on the gains now, almost over 6.5%. When the results came, 7.5% now. Moments back we discussed and we told you that management guided for the next 3 quarters sharp gains coming in their EBITDA margins, which are currently at 16%. It has shot up. It's almost $30, just about $30 away from the 1,000 mark. It will be interesting to see after that because Duresh, if you remember, between 800 and 900, this stock used to get stuck. Is it going in that direction above 1,000 now?
Yeah, finally the stock has broken out. So if you look at the last many years, back in 2015, 650 was the top. 2018, it was closer to 800. 2021, it was around 800, 850. Back in 2022 and as well as in 2023, started made multiple tops around the 900 mark. So the stock has not done as well as was the expectation from it. But finally, we've seen a fresh breakout, good volumes today. This could be the time where it finally gets re-rated, goes towards 1200 odd levels in the short to medium term.
On the subject of breakout movers, let's get in some BTST trades as well. Naresh?
So first would be a buy on ONGC. Continue to like the stock. A revised stop loss now at 175, target price of 180.82. Second is a buy on Ashok Leyland. Breakout into new 52-week and all-time highs. Flag breakout done here. Stop loss at 185, target of 192.
Kunal, what about your BTST trades?
So we'll go with the first one is Thomas Cook. The stock has broken past about the 100 levels. Exceptional price performance in the last 3-4 days. So expecting a target of 120. Stop loss could be kept at 95. And the second will be BEL. That stock has also clearly given signs of a breakout, more of a V-shaped recovery for BEL in the last 6 to 7 days. So targets of 140, stop loss at 127.
Okay, that's the take coming in on some of the BTST ideas and some of the more buzzing movers. Just want to pinpoint what the pharma pack is up to, because that's a clear leader, and you've got a DRL which is sitting right there on top, and I think it's a fresh high for DRL right now, 3.25% higher. It's one of the top leaders, or rather the top leader amongst the large caps. There's of course Hindalco. M&M has been doing very well, a good 2.5% move there. 1540 is where that stock is, thereabouts. Tata Motors looking very strong as well. So the entire auto pack, and especially the passenger vehicle manufacturers along with CVs, they are the ones which are actually taking leadership. Berger Paints numbers there for you, about an uptick of roughly 10% is what they've posted in terms of their bottom line, and I think there is a bonus announcement if I'm not mistaken. We'll await more details on that. You can see the stock price is recovering from the session lows right now. Shivani, I mean, we've been asking most of our guests this. According to them, or according to you, which is the most overvalued and undervalued pocket in the market, if there is anything undervalued according to you?
So overall market valuations are clearly on the upper side. So if you look at a headline level, when you look at our markets, Nifty is now trading on a 1-year forward basis, closer to 1 standard deviation above long-term averages. So valuations appear to be somewhat stretched. However, when you look at our market valuations on a relative basis, so if you look at the premium of India to the emerging market peers, the good part is that India's premium is at long-term average levels. So on a relative basis, we are not as expensive as one would have imagined, simply because the entire emerging market pack have also gone up. So that provides some degree of downside support to the market, even though near term, because of absolute valuations, you could see some degree of volatility. So the way we have been constructing our portfolio is clearly looking at pockets of growth where earnings growth sustainability is visible. And of course, as you said, valuations in this market being reasonable is difficult to find. But what we believe is that the domestic facing sectors continue to be better placed simply because of the visibility of growth. So in terms of the sectors where we continue to remain positive and overweight in our portfolios, the entire domestic cyclical pack, which is industrials, manufacturing and infrastructure, pockets of the financial space where we continue to be overweight, auto and auto anchs also overweight, and cement. So these are some of the key areas where we continue to be positive in our portfolios.
That's quite interesting. Autos as well, one amongst that. And Kunal, whenever you think that it's done for autos, they move up even higher. Right now also, most of the recoveries are led by an M&M, Tata Motors, solid moves there.
Yeah, and I think, so the standout point for the auto stocks is that it's not like, any other sector, like maybe pharma or banking or such other sectors, that all stocks are moving into a, similar kind of a trend. You have very few performers which have been consistently performing quite well. So I think M&M from mid of 2022, I think has been a standout performer from 750 levels, if I remember correctly, to now 1500 plus levels. Tata Motors has been a standout performer over the last 2 years or so. Ashok Leyland has managed to make a comeback again about that 180 plus mark. But then there are strugglers. The likes of Maruti, for example, is still struggling at that 9,500 levels broadly. Hero MotoCorp has been a performer which has a lot of potential, but then surprisingly the stock has been a lot more sideways. So when you look at the large cap auto stocks, it's just 2 or 3 names which are acting as more consistent charts, and I think that's where one should be betting on if there is any kind of a bullish sense on the auto pack.
Okay, that's the take coming in on autos. In the meantime, let's just take stock of what else has been buzzing in the market or not. While ABFRL has now moved a solid 7%, India Cement as well has seen a very, very strong move. And I can see a big move coming in on Voltas as well, which is also sitting at the session top. A good 4% move coming in on Voltas as well. Just wanted to get your thoughts in on the charts, Naresh, on India Cement, and I could include even an Ultratech in there.
So India Cements looks very interesting. The stock has been choppy around this zone of 220 to 230. The recent highs for the stock was around 235. It has corrected well from 300 levels, and we've seen a strong trend across the small cap cement space and the mid cap cement space. So the volatility in India Cements continues to be due to the fact that it keeps going into derivative ban. So out here, would be looking at it as a buy about 230 levels. Tomorrow, hopefully, it should be out of the derivative ban as well. So looks promising, could be slow and steady move towards 300. Ultratech, on the other hand, has been a slow and steady mover, but has a fresh breakout about 8500 levels. If that happens, that could also take leadership moves.
Sure. Okay, that's the take coming in on what you're seeing within the cement pack, with India Cement really leading the charts right now as we speak. Of course, you know, Union Cabinet has now approved, at least that is what we understand, the bill to make amendments to the CGST Act. The online gaming is going to be included under actionable claim through amendments in the CGST Act is what we're understanding, and is going to be categorized under actionable claim to charge 28% GST. Remember when the 28% GST was applied without any classification between skill-based games and money-based games, you did see a big thrash down on the likes of Delta Corp. That really tumbled along with Nazara as well, although Nazara said that they have only a minuscule exposure to money-based games. More of an impact for a Delta Corp. You did see a big crash down for the stock, and from there it's recovered thereabouts to 186 odd levels or so. But just counting down to the market close and just looking at some of the other movers, ITC, of course, has been going very strong, 1.25% of a move coming in on that stock. Even metals are actually seeing a decent move there. Tata Steel, JSW Steel, etc. are all looking good. And L&T ahead of its AGM, which should be starting shortly at, I think, about 3:30 or so, less than 5 minutes to go for there. L&T as well is closing in as a big mover, about a 0.6% gain, 26.50 thereabouts. Remember, this is of acute importance, today's AGM, because that's going to be AM Naik's last AGM as L&T's chairman rather, and after his 6 decades of a reign, 60 years at L&T, he's finally ready to hang up his boots. So would be interesting to hear out what he has to say about his journey at L&T and L&T's journey sans him going forward as well. That stock closing in with good gains, 26.50 thereabout levels there. But Shubhani, banks, you know, given the kind of trend that you've seen from the earnings so far at least, NIMs have clearly peaked out. But does that mean the investors need to worry, or the heydays of banking are over?
No, I think while NIMs have clearly peaked out for the banking pack, but if you look at a few key points, one is that growth, and especially the loan growth trajectory, has been much better than what was anticipated. And especially the private sector banks continue to go ahead of industry. Deposit growth at the margin has started to improve, and that provides some degree of cushion and also will help loan growth going forward. Now, while margins have clearly peaked, banks do seem to have some amount of cushion in terms of their OPEX side, which can help offset some of the impact of the margins, plus loan growth being better than estimates also helps. And finally, if you look at asset quality trends, while in some pockets there have been some inch up in terms of the default numbers that we have seen, but overall asset quality trends continue to remain very benign. Remember, over the last few years, banks had built up contingency provisioning because of COVID, and therefore there is some buffer on credit costs as well. So overall, what we believe is specifically for the private banks is that return ratios should remain healthy. And you were asking earlier in terms of pocket of valuation comfort, valuations seem to be fairly reasonable because valuations are still at long-term averages, despite the fact that we have seen ROE expansion for some of these banks.
Okay, Shimani, we'll let you go on that note. In fact, good to have you, Kunal and Naresh, as well on the show, closing in with a mild bit of recovery, but a decent recovery actually from the session lows. So after we chose to consolidate for quite a while, we finally saw an uptick coming in and managed to close in above the 19,600 resistance level. Let's see whether the recovery continues tomorrow also or not. For now, it's a goodbye from all of us here.